really has been on, since the morning, has been on US CPI, right? And of course, the Fed reaction function, etc. But we got inflation data here in India as well, and that is looking good. We also had the IIP numbers. IIP, of course, a little backward looking, but CPI, of course, for the last month. Latha is here with details on both. Latha, morning.
Well, I think we must brace for a Diwali in the bond market. The yield should go to about maybe 6.95, the previous low. It closed at 7. And concomitantly, you can expect a rally in the bond markets. And I'll tell you why. The CPI number came in at 4.75. The CNBC-TV18 poll was at 4.9. Most polls were at 4.9. And importantly, the Reserve Bank's average for April, May, June, the forecast that they gave was 4.9. So this is 4.75. We already have an April of 4.9. Chances are for the quarter, we are going to undershoot the Reserve Bank's forecast. Food inflation is still high. That's 8.7, but that's largely base effect. The year ago is 2.9. So, that's why this looks big. Food prices will rise in June. As we all know, vegetable prices are already up. But then there again, you're battling a base. So it will not show up so much in the headline. It will still come in lower. But the biggest number is the core inflation. At every point, people say, oh, it's gone down to 3.2. It can't go any lower. It was 5% year ago, 5.05, and 6% 15 months ago. Look at the extent to which core has fallen. And of course, this is a calculated number. There are some economists on the street who believe it is 2.97 because they calculated a little differently. This is actually deflation levels. So now what will the Reserve Bank do will be a big issue. Their overall forecast is target is 4%. And they've always said that they will look at core rather than, food and fuel, over which they have less control. And if their targeted inflation is now down 1 percentage point lower, the cries will go up and expectations will go up that the Reserve Bank will at least change its stance. Considering that the Fed has said it's only going to cut once in the current year, maybe a rate cut will be difficult, but definitely a change in stance. And in any case, the bond markets will internalize it already. Now, of course, there are two dangers we will have to remember. That the budget is not out of the way, but the noises coming out are indicating that the fiscal deficit will be adhered to. The other big thing that we will have to wait out for is the RBI's June bulletin, where they will tell us what is the neutral rate. Now, the neutral rate is the difference between inflation, that is a 4.5% forecast for the current year, and the nominal inflation rate, nominal interest rate, which is the repo rate. Repo rate is 6.5, inflation 4.5. The difference of 200 basis points is too high. Originally, the Reserve Bank had said the difference should be, neutral rate is about 80, 90 basis points. But now after COVID gone, it's expected that they will bring it up. But will they bring it to 150, 175, 200? If in the June bulletin you get 200, then there are no rate cut hopes. But chances are they won't say that. So that's the next thing to watch, the Reserve Bank's June bulletin. And then, of course, the fiscal deficit. But today, prepare for a Diwali in banks and in bonds.
All right, Diwali in the middle of summer. But
not a good combo.
Well, Latha, thanks very much. Excellent wrap out of the data that we got here as well. We'll take a quick